They gave me a $20,000 raise, and somehow my money felt smaller. I thought I was finally getting ahead, but when the first month ended, I felt like I'd been played. Here's the paycheck trap that makes a raise feel fake, and the 3 numbers you need to check before you celebrate. When I got the raise, I did what everybody does. I started spending the money in my head before it even arrived. Maybe I'd breathe a little easier. Maybe groceries wouldn't feel annoying anymore. Maybe I'd finally stop checking my bank app like it was a medical emergency. Then the paycheck hit, and I remember staring at that pay stub thinking, wait, no, that can't be right. Because the number in my salary letter went up, but the number in my actual life barely moved. If you've ever felt like you're working harder but earning less, this is exactly how it happens. And no, you're not stupid. This system is just built in a way that hides the real math until it's too late.
Let's do the part nobody explains. A $20,000 raise sounds huge. If you're paid every 2 weeks, that's about 26 paychecks a year. So on paper, that raise should add about $769 to each paycheck. That's the fantasy. Now here's reality. First, payroll taxes don't ask for your feelings. Social Security and Medicare alone can take 7.65% of wages. That means part of that extra money is already gone before you even start looking at federal income tax. Then your employer withholds federal income tax based on what that paycheck suggests you earn, plus the information on your W-4. The IRS is very clear. Withholding depends on your income and the details you give your employer, and they specifically tell people to check it again when income changes. Then maybe there's state tax. Then maybe your health premium jumps because you picked a better plan during enrollment and forgot about it. Then maybe your 401k contribution is a percentage of pay, which means the moment your salary goes up, the dollar amount going into retirement goes up too. That money can reduce current federal income tax withholding, but it still lowers your take-home pay right now. So that $769 raise per paycheck, it does not turn into $769 in your checking account. And if you were expecting about $1,538 over 2 checks in a month, but only felt a few $100s of breathing room after withholding, taxes, benefits, and deductions, suddenly it feels like you lost around $1,200 of what you thought the raise would do. That's the emotional scam. Not that the raise disappeared, but that the difference between gross pay and real life is way bigger than most people expect.
Now, here's the part that makes people angry. The real culprit is not you got pushed into a higher bracket and now all your money is taxed more. That's one of the biggest myths in personal finance. The IRS explains it very plainly. Federal income tax works in layers. If your income moves into a higher bracket, you do not pay that higher rate on all your income. You only pay the higher rate on the portion that falls inside that new bracket. So if your paycheck suddenly feels smaller, it's usually not because your whole raise got eaten alive by tax brackets. It's because of a combination of things happening at once. Your withholding changes, your payroll taxes keep applying, your benefits may cost more than you realized, your retirement contribution may scale up. And sometimes payroll treats extra money like retro pay, back pay, or a bonus under supplemental wage rules, which can create an even uglier looking check. The IRS says supplemental wages are often withheld at a 22% flat rate under the standard method. You're not stupid, they just don't tell you this. And if you're making roughly $50,000 to $120,000, this is exactly the zone where a raise can look life-changing on paper and feel weirdly disappointing in real life. Here are the 3 mistakes that make this worse. Mistake number 1, not checking your W-4 after the raise. The IRS literally recommends reviewing withholding when your income changes. Most people never do. So payroll keeps operating on old assumptions, and you don't notice until your check feels off. Mistake number 2, accepting benefits without reading the actual payroll impact. A lot of people look at benefits like they're free perks. They are not. They're line items. Health insurance, dental, vision, disability, HSA contributions, parking, all of it. And on retirement plans, many employers even use automatic enrollment features, which means money can be coming out unless you actively changed it. Mistake number 3, negotiating the raise in gross pay and never asking about net pay. Gross pay is the headline. Net pay is your life. Gross pay is what they announce. Net pay is what buys groceries. Those are not the same number. And if nobody walked you through that difference before you signed, then yes, of course, the raise felt smaller than promised. This happened to my friend, too. He didn't catch it for 3 months. Not because he was careless, because almost nobody is taught to read a pay stub like a contract.
Here's how you fix it. First, do a paycheck checkup. Use the IRS tax withholding estimator, then update your W-4 if the numbers are off. The IRS says that's exactly what employees should do when income changes or when their refund or tax bill isn't what they expected. Second, ask Payroll or HR for a modeled pay stub before you accept or after you receive a raise. Not a verbal estimate, not "it should be about this much," an actual breakdown. Ask what your new gross pay is. Ask what your benefit deductions are. Ask what percentage is going to retirement. Ask whether any retro pay or bonus is being withheld as supplemental wages, because if part of your money is being treated differently, the check can look worse than normal. Third, review your benefit elections and retirement percentages. A traditional 401k contribution can reduce current federal income tax withholding, but it still reduces the cash hitting your bank account today. And those elective deferrals are still generally subject to Social Security and Medicare taxes. So if your goal right now is monthly cash flow, don't just celebrate the raise, rebuild the entire paycheck. And I'm not a financial advisor. I'm just someone who got screwed by the difference between salary math and paycheck math, and I want you to avoid it. Now here's the twist. Everybody wants to know the salary where a raise finally becomes free money. Ready? It's not a salary, it's a condition. The raise starts to feel like free money when no new fixed deductions show up to eat it. That's the secret. Because tax brackets are marginal, only the next slice gets taxed at the higher rate, not your whole income. So the real turning point is not some magical income number. It's the moment your raise stops getting ambushed by hidden line items. No surprise benefit increase, no auto escalation you forgot about, no wrong withholding, no ugly supplemental withholding on extra pay. That's when a raise finally feels like a raise. So here's what I want you to do. Open your next paycheck. Look at the gross increase, then look at what actually landed in your account. If the gap is bigger than you expected, don't ignore it. Because that gap is where people lose months, sometimes years, without realizing what's happening. And if your raise still feels fake, comment "scammed." I'll know exactly what kind of follow-up video to make next. Because once you understand the pay stub, the paycheck stops controlling you. You start controlling it.